The Hedgeless Horseman here again. The second video today, January 26th, 2023. In this one, I'll talk a bit more about, long-term value investing, I guess, and we're gonna look at some points coming from the old and wise buy low. If you follow me on Twitter, you probably know what I'm talking about. Anyway, first of all, I just want to highlight a post I made recently, article I made, which is up on the site. Building your own diversified junior mining conglomerate. I mean, when you really start to, first things first. This is the LME inventories. This chart is, I think this article is maybe 2 weeks old. LME inventories have plunged to the lowest levels in at least 25 years. So, and that includes aluminum, copper, nickel, zinc, lead, and tin. Would you want to own the commodities that are getting drained, where we have very little left, lowest inventories in at least 25 years? If you owned commodities, would you want to sell ownership of those, especially if you can buy them cheap in the ground right now? And if you can buy real estate where there might be even more of these commodities that are getting drained. In what other time period over the last at least 25 years would you rather personally own and have direct ownership in commodities than now? Let's say these commodities. If there was ever future supply would be the most promising, let's say, to own, I would say that would be now. These inventories are almost empty. So commodities are probably going to go up in value. The thing is, that is not yet reflected in the actual many of the companies that might have the future supply, which we are running out of. I can't come up, for the life of me, I do not understand why anyone would dabble in artificial scarcity like crypto when you have a setup like this. This is not like, Bitcoin's like, might be around in 10 years, might be used, might go up in value. It's like, there's a lot of ifs in that case. These are critical elements, critical minerals. If we don't have these, there won't be any Bitcoin mining. So again, for the life, and obviously perhaps we shouldn't really complain, because if all the crypto folks were aware of this and how the risk reward is so extremely good in commodities, given that we know these are all needed, we don't need crypto, we don't need Bitcoin. There is no margin of safety in any of that. They haven't even been around for that long. Humanity did well without Bitcoin or any cryptos. Humanity cannot keep our civilization going without these. So I mean, to me, it's like you have to go into risk-reward school if you would favor artificial scarcity of something we don't really need over real-time scarcity in something we do need. and have needed for, well, I guess like thousands of years, or at least hundreds in some cases. To me, again, this is the most no-brainer thing ever. It's like, why am I a commodity hoarder? This chart basically says it all. Well, not only that, because okay, let's say and this is a clip from the World Economic Forum. We are at critical stages for copper, zinc, lithium, yada yada. Probably, said nickel and some other stuff as well. But it's like, yeah, they're saying we are at critical stages. Like, we need this, and there's not enough of it being produced. I mean, this is a global thing. Why is Pentagon getting involved with securing critical elements? Pentagon is not involved securing that there will be enough Doge coins around, or Bitcoin. Well, maybe in some way they are involved in Bitcoin from for other reasons, but it's like, this is the most basic stuff. Commodities are the lowest denominator. We need commodities to have a civilization. It's like when you read about chat GPI or whatever it's called, AI, robots, etc., etc. It's like they're going to take everyone's jobs. You better not become obsolete in whatever job you're doing. It's like, yeah, sure, I can understand that, and that's probably gonna increase. But AI can't. Uh, I mean, even the robots need commodities, and if you have a bunch of AI and robots and whatever, and they are become incredibly efficient at manufacturing goods, so costs go down. That means people can buy at least even more. We can produce a lot more stuff, which would need even more commodities. And if you own a mine and there's robots take over and AI helps you make the mine even more efficient, then all the better, because you're probably gonna have better margins on your in your mine. And the thing is that, as I say here, metal deposits are rare, but there's no doubt more discoveries will be made. What is even rarer is real estate land, because land is the only thing that we can't discover more of. So if you would own all the prospective areas, for example, even if all of a sudden robots and AI made could basically almost turn any deposit into a mine. If you owned all that, I mean, they would be coming to you anyway. Of course, that's not feasible, but it's like, yeah, we're years away from that happening. The point is that even in a much more advanced society with robotics, robots, automation, etc., we're probably going to use even more commodities, especially if we're going to electrify everything, etc. So it's like, I cannot, for the life of me, be more grateful that I'm aware of commodities right now. And to me, there's a kind of a natural hedge, like gold and silver physical is the hedge to pretty much everything, at least more securities related. And the gold, especially gold and silver as well, is kind of a hedge towards the or against the base metals, because if the economy crashes, everything goes belly up. We enter a shitstorm. There's gonna be a lot of chaos. Probably some societies might not do too well. The debt bubble might implode. We might have hyperinflation, etc., etc. If you own, physical gold, silver, and gold and silver miners, let's say, maybe they go up. I don't know how much. We remember the 2011 rally, and gold is already almost at 2011 levels, but there's no real rush yet. But if everything goes belly up, maybe we enter a global recession, which really the debt levels, I guess, can't really take. Something happens. Gold, silver revalues. You'll be better off than 99% of people. Uh, yeah, let's just, or 95% of people at least. But if we just keep chugging along, if we don't have a great recession for quite some time, that means there's going to be, a steady demand rise. If we are about to electrify everything, etc., and we will have these infrastructure projects and the Green New Deal, etc. If we just keep chugging along, I mean, there's a pretty obvious trend here, which is down. We're running out of commodities. So if we don't have a global recession and economic activity keeps on, let's say, growing 2-3% per year, global economy, we're not putting in enough mines. And if we add the green revolution and EV revolution, I mean, that means even more commodities or more of a lot of the commodities used. So it's like I don't see how that is not going to end up like, okay, prices of commodities go up. We've seen what happened with nickel short squeeze, for example. I mean, that just went up like 300% or something. That was obviously again a short squeeze, but there's a reason why that happens. I mean, low liquidity, etc., and there not being enough nickel around to meet the margin calls, etc. So, yeah, I mean, it's just no brainer, no brainer. But I used to only really invest in gold and silver, but I cannot ignore this trend here. Now, when it comes to lithium, for example, that is a the lithium sector is really hot right now. That is a lot harder. I'm not an expert on lithium. I prefer to buy something that I know is cheap. There are obviously those, like some of the economics on some of these lithium projects are just, I mean, the NPVs are just enormous, and the payback time and IRR, etc. Incredible, incredible. It's like you see lithium projects. I think it was like Sigma Lithium or whatever they call, like a project with 15 billion net present value and payback in 3 months. I mean, that's worth like a, a couple of the best gold mines in the world doesn't typically reach 15 billion in net present value, for example. So obviously, I mean, that's no, it's just incredible the way the value of lithium right now. But the thing is obviously that lithium is quite abundant, and there's, I mean, yeah, I mean, there seems to be deposits popping up everywhere. So I don't know how quickly they can get that into production, etc. But we know lithium is hot. Prices have gone up a lot. Will they continue to do so? I don't know. Some call it like the new iron ore, so maybe it's here to stay. So it's like, yeah, I wouldn't mind having some lithium exposure as well. It's like, especially some of these, let's say, high quality projects, which actually have maybe quite a bit of margin of safety at today's prices. Like, yeah, they're absurdly, the NPVs would be absurd now, but even if lithium goes down like 20%, maybe they're not really that expensive right now, etc. That you have to look up yourself, etc. But overall, it's like, yeah, the commodities is like, I mean, if you own all the Bitcoin, you basically control nothing. If you would own all the commodities, you would control the world. So again, if you think not from a short-term speculator, that's like, yeah, I'm gonna own this. I'm gonna own this company. I'm gonna have partial ownership of these companies, all their assets, and I'm in here for a quick trade. If it goes up 20%, I'll sell. You're obviously not an investor in the typical long-term sense, even though, yes, from a value shuffling perspective, it can make sense. But you're mostly a trader. You don't really care what you own. You never saw it as an owner. You don't care about the underlying value, etc. But it's like, what gets me really greedy, what keeps me very much in the game, the cheaper the sector is, the better, is because I like to think of myself like an asset hoarder. Because I know that if I buy shares of a company, I have the direct interest in all the assets that company has, all the metals that company has. So in Magna Mining, for example, if I own shares in Magna Mining, I have direct interest in the most advanced nickel junior copper PGM exploration, advanced exploration developer play in North America. I own a small percentage of these 1.3 billion pounds contain nickel equivalent. I directly control some of that, and we know that nickel is, a scarce commodity, especially nowadays. And you have a bunch of value creators. So it's like, I don't know exactly what the price market cap is today, but let's say it's 200 million. Maybe they have, what do they have in cash, like 26 million or something. So let's say 175 million Canadian for all the assets. If you had $5 billion, would you want to buy 1.3 billion pounds of nickel equivalent for 175 million Canadian in today's world? You would have one of the only real junior with near-term production potential, I think, in all of North America for some of the critical minerals, nickel and copper, and PGMs are precious metals, or they're quite rare as well. Yeah, I would think. I mean, this is a legit business. These are valuable products, valuable metals, etc. And you get one of the you get the best team you could ever hope for to have in this junior in particular, since they literally are experts on Sudbury mining and exploration. So it's like, if the stock price of Magna goes down, let's say, because there's free shares trading, shares coming free trading soon, that means, okay, I could increase my direct ownership of all of this. I partially own all of this, and I can own more of it for a cheaper price. I buy these, pounds of nickel, etc., for even less, while value, like we saw in the chart, is going up for future supply. So if you think like an asset hoarder, like you actually are buying you're getting something for what you pay the seller of the share. You're acquiring his ownership of these assets. I think you would become much more hodl focused. I think you would have a much easier time actually buying cheap, because you wouldn't be just looking at where is someone, at what price is someone else going to give away ownership tomorrow. That is not your focus. You're not just looking at a piece of paper and flipping. It's like, 1 week I partially own 1.3 billion ounces of contained nickel equivalent. Let's say Magna goes up 10%, then I sell out. Yeah, you owned it for maybe a week. That's not much time to, give this team time to create even more value, or even monetize the value at hand. So it's like, to me, that is just what typically everyone does. Is like short-term trading. They're missing the whole point of a great value case, because they're not after that really. They're not using the edge. You can trade anything and be up or down 10% in a day. But there's not too many companies, let's say, where it's like you're literally stealing value. They're probably going to create more value. And the more time you give, the longer you hold a company, you're probably going to make even more. Then we have like Eloro Resources. They're going to have a maiden resource estimate out in March, I think. That's just from this Iskaiska project here. I think that would be huge. I would think they will have hundreds of millions of ounces of silver, a large amount of zinc, a large amount of lead, and a large amount of tin. And they might have a lot more of all of those still at Iskaiska. And you own, I don't know how many projects this is, but a lot of projects. And since we know how good success they had on their, let's say, first flagship project, one would think that they're pretty good at picking prospective areas. And here's a pretty famous mine up here, not far off. This is the Bolivian tin belt. How much future supply can be hidden here? If you own shares of Eloro, you have direct interest in anything that could be, uh, has been found and could be found here. And I would guess that there's a lot of commodities that could be found in this land package. And they're not making any more of prospective targets like this in a tin belt, and tin is quite hard to find as it is. I-80 gold, bunch of sunk costs like one mill, Grand Creek Mine, Ruby Hill Mine, Cove Mine, Buffalo Mountain, and they have also a mill near Ruby Hill. You basically get ownership, direct interest and ownership of 4 major projects, and the Lone Tree Mill, which is probably would cost over $1 billion to build today. Because in the time of, oh, it's the street sweeper. It, in a time of sunk costs, well, when inflation is going up, the value of sunk costs is going up because it would cost more and more to build a mine right now. So if you have it already built, I mean, let's say this Lone Tree, the Lone Tree milling complex here, maybe it cost 500 million when they actually built it way back when, or 400 million. Today it might cost $1 to $5 billion. In 3 years it might cost 1.5 to $2 billion. So in an inflationary period, it's obviously pretty good to have sunk costs, because anyone else who does not have that yet, the cost of them getting into production is increasing while you have that built already. So the value of what you already have is going up as well. Montage Gold, 4 million ounces and counting. Probably easy gonna hit 5, maybe 6, maybe 7. They have more ground as well. It's like, yeah, you own one of the largest undeveloped gold projects in Africa. I like that. Arizona Sonora Copper. Bunch of copper in Arizona. Nice. Yeah, I would like to own some. One of the most advanced copper plays in Arizona, which is a tier 1 jurisdiction. They have water rights, etc., etc. Okay, so you have your in your mining conglomerate. If you own some shares of this, for example, in your portfolio, you have direct exposure to copper. So maybe, I don't know, maybe you have a 3% position in this, for example. Your conglomerate, 3% is copper exposure, okay? I don't know what the market cap is, I don't remember, but it's like, I don't know, 100, 200 million, whatever. Maybe one day this is worth $1 billion, or get sold for, I don't know what. Dolly Warden Silver, if you like silver. Okay. Multi-kilometer trend, 15 kilometers in total. 7 deposits that we know about. Already a bunch of gold and silver on the books. British Columbia, Canada, where there's a premium and where major miners like to be, as evidence why they do deals across British Columbia on a regular basis lately. This is probably gonna grow because I think pretty much every target here is still open. So what would you own? How many years could this be let's say a profitable mining operation in the future, and how much more could it grow? You can buy it for like 200 million Canadian today, and they have like 20 million in cash or something. Yeah, it sounds like a pretty good deal. I mean, there's not many high grade silver juniors around, especially in Canada, as advanced as this. Fireweed Metals. Lundin's recently took a stake. Huge land position, or huge project. They have a tungsten project as well, which is a critical mineral. And the Lundins are in, so they think this could be, a very big deal. maybe this what they have here could be mined for zinc for decades to come. Would you want to own that? If you can buy it for, I don't know what the market cap is today, like 120 million Canadian, and this, let's say, potentially could be a multi-decade zinc operation in Canada. Would you like to be have partial ownership of? Let's just pretend this actually becomes a mine one day and produces zinc for 30 years. You could today you could have bought it at 120 million Canadian when zinc when zinc inventories are near the lowest levels in 25 years. Would you think that you might have, gotten a bargain here? Line 1. They're going towards production with a whole caldera left to explore. Who knows how many decades this could be mined? Let's say they start production in before year end, and let's say it goes well and that's profitable. Let's say you're buying a future profitable gold mine which will be mined for 20 years, producing positive free cash flow. You can buy it for like 200 million Canadian today. Do you think you would? Do you think you would get a steal today? Maybe. I would think so. But again, it's like if your focus is on where is line one gonna, if is line one gonna go up or down in price tomorrow? Who knows? Is the big case, the big money, for example, in stores like this, is that the next 20%? Or is it hey, if this goes well in a few years, I might have, in 2 years I might have 5 times my money. In 10 years I might have 15 times my money. Or you want to bet on every share price movement. Nevada King, enormous land package. Again, they don't make any more real estate in this. I mean, Nevada is a limited supply as it is, land in Nevada, and the Battle Mountain Cortez Trend is a small part of all of Nevada. You would have direct interest in all of this land if you own Nevada King. That value will not be realized in a month, though. Brixton Metals. Would you want to own, I don't know how many square kilometers this is, but this is huge, with copper and gold showings everywhere, which might contain, who knows, maybe there's 3 large copper mines in this picture here. Maybe there's 10 million ounces of gold. Would you want to buy that for, I don't know, 80 million Canadian today? No guarantees, but it's like, hey, if we teleported 5-10 years ahead in time, maybe today was a good day to be buying Brixton, Western Alaska. What's this gonna be in 5 to 10 years? What if this is a multi-decade long, high margin CRD mine? Bonanza grades of silver, lead, and zinc, and maybe there's a big porphyry somewhere as well. Maybe this will be mined in 30 years and provide cash flow for 28 of those 30 years. Would it be a good steal today? Irving, I don't know how many, yeah, okay, at least 14 projects in Japan. It's like, yeah, again, it's like you don't need any more juniors in Japan, obviously, if you own Irving. Is there a guarantee that they will succeed? No. Could there be a few gold mines in this picture? Yeah, I think so. So fast forward to 5-10 years, do you think, I mean, if something goes right and they find something Hishikori like, that has been a profitable gold mine in or over like, I don't know, 10-20 years. I mean, some of these mines are hundreds of years old. I mean, they haven't been continuously mined for that time, but it's like hey, there might be some value here. If you come back in 5 years, that's the thing. It's like if I had to guess in all of these cases, I would guess they would be worth a lot more than they are today in 5 years. Some might be worth orders of magnitude more than today. And you wouldn't need to be right on more than maybe one third. And you would have made a lot of money. But everybody squanders that because nobody can hold a stock longer than a month or the next until the next catalyst is here or whatever. It's like Snowline. People complain about the correction. Look at what you're buying. Snowline was down at a point today 6%. Nothing changed. Gold was even up. You could buy all of this for 6% less than you paid yesterday. You have direct interest in all of these targets here. This incredibly large land package. Look at the scale bar. They have a discovery at Jupiter. They have a discovery at Valley. They have here is Fireweed Metals, and they have base metal targets as well, and a bunch of gold targets. And you can see primary targets, 1, 2, yada yada yada, like I don't know, 20. Is it a sell at 320 million Canadian? Or is that probably in 5-10 years, is this gonna look cheap today? I would think so. Pacific Ridge, 5 projects, one let's say advanced discovery and one discovery or I don't know if one should say it's a new discovery, but it's like yeah, RDP where Antofagasta is drilling. I think the market cap is around 30 million Canadian. They have 5 projects and they have other projects as well. I think outside of this area, but like very peripheral projects. But this is a copper belt. Here you have Kema South, etc., etc. And Antofagasta obviously is interested. What could this be worth in 5 years? What is copper? How much copper do we need in 5 years? What if there's a mine here? How much is that going to be worth in 5 years? Would you want to give away direct ownership of 5 good copper gold projects, including 2 discoveries, for 30 million? Given what we know about the fundamental, supply and demand of copper, for example. Might this look very cheap in 5 years? Yeah, I would think so. SK Mining, huge land package. More targets than they can even drill in one season, even if they have like 5 rigs. I see all the Bleg samples here. Made one could say a discovery at Scarlet Valley here. We know they have a TV Jeff, Sibluli we know. They have a bunch of other targets that they haven't even gotten to around here and here, Bleg samples lighting up. If they keep drilling, we know what SK Creek was worth. We know what Skina has drilled up, which is like the remnants of SK Creek. We know what that is worth today, over $1 billion. Might they find something here? Might this land package be worth something? I think so. Novo Resources. Insanely large land package. Multiple elements, minerals, metals. What is this worth in a world where commodity value is going up, where future supply of commodities is going up, where we're running out of commodities? Might this be worth something? Right now it's basically trading like on par with the current cash and share values, equity values, I think. Although they have a burn rate. That is one problem. But we have a mill, so that's both a blessing and a curse because it costs money to have on care and maintenance. But basically at face value, everything here is priced like there is it is worthless. With that said, yes, it costs to have this kind of a large land package. It costs to have a mill on care and maintenance, so there's no guarantees. But if they make a discovery and they still have, tens of millions, etc., they can do a lot of drilling with that immediately without needing to raise. So again, at face value, this is all uh, for free, basically. This is very much a hoarding situation. They've hoarded, well, the largest land position of any junior I know, at least. What if, let's say they make a discovery and get things taken care of, and they keep a large land package, and fast forward 5 years, what are some of these commodities going to be trading at? Kennerland Minerals have a bunch of projects, really like that one, super cheap as well, lower risk, majors as partners. Alpha Exploration discussed them recently. I discussed Headwater Gold recently, but it's like again, it's like well, most of these projects and the potential in these projects are almost given away for free. Core assets, huge land package. This is a 40-kilometer scale bore. How much? What's the metal endowment in this blue property? They've already made discoveries, and then there's a bunch of other stuff as well. So it's like just think about that. Your portfolio, one could say that is a mining conglomerate. And I dare say, I mean, contrary to what people say, is like, I mean, the funny thing is like conventional wisdom, let's say, they say 60-40, 60% in bonds or stocks, 40% in bonds, and the 60% is in stocks, supposed to be blue chip stocks. And if you have 10% of that 60% or whatever in miners, you should have like 9% of that should be in majors and 10% should be in juniors. I'm going the total opposite direction. I don't own any bonds. I only own stocks. I only own juniors. I even have concentrated positions in juniors. I am doing literally the opposite of what anybody would advise me to do. So far, that has paid off handsomely. But most people would obviously not be able to do that because that would be too much pressure. They would, and of course, I'm like, if you don't even have a strategy, if you don't have a track record of, beating the market in any way, shape, or form, why should you be confident? And like I've tried to do over I don't know how many videos, like explain how I think about investing. Why just having a longer time frame than the market and just thinking like a hoarder that price is what I pay and value is what I get, and at times you can buy stuff for 70% less than it's worth, for example. That's, in my opinion, how you make the most amount of money the easiest way. You buy something that is cheap, so the risks comes to the upside by definition, and even if you get, even if you bought any of, let's say, any of these cases, you said, hey, I'm gonna hold them in 5 years uh, until they're either overvalued or the case is going south, meaning that I think they have peaked in value or that the fundamental trend is down. Some might again still be growing 5 years from now, and if you just held that and they were still growing in 5 years, you would probably be up a lot. If some cases went south or whatever, you lose money. But maybe you weren't even if you take, I don't know, 80% haircut in some stocks, but you find something else with like good runway for growth. I mean, yeah, you can make that back. Uh, but again, it's like if some of these companies become big winners, you're not even gonna capture that win unless you probably hold them for 3 years at least. 3 years. Think about that. I mean, if you're after 10 baggers, which everybody says they are, but they all end up trading anyway. Uh, on that note, I got an email from a person today, asked me about uh, Goliath, and anyway, his conclusion seems to be that he was gonna unload and wait and see. It seems on the downtrend, yada yada. But I guess the grammar was a bit off. I don't think he's a native English speaker. Not to bash on him, but it's like what he basically said was that I'm gonna unload Goliath because it has gone down. I don't know when he bought it, but it has gone down. I mean, obviously, if you bought it any point higher than this blue line here, you would now be sitting at a paper loss. Uh, but he was gonna sell because and wait and see because the trend is down, as he says. First of all, is the trend even down? What trend? I mean, if we take this as a trend, it's obviously up. And again, do we expect SureBet to grow? I mean, is there more potential? I think the market cap is 60 million Canadian today. What if this becomes a multi-million ounce mine? What if the processing costs are very low? What if the PEA in 2-3 years is really good? I mean, what if then after next year's campaign, it's like they focus in on the higher grade zones that they located, etc. What if this year's drill campaign is really really good and they have even more high grade hits, more consistent high grade hits over uh, wide widths? What if they're going to drill some other place where they might make a discovery because there's outcropping shorebed style mineralization? So it's like what trend? But that is just, I mean, I chuckled a bit because that was literally what I talked about uh, the last video. Everybody is focused on guessing where the price is going to go tomorrow or in the short term. And at everything, I'm probably going to send this short to him. It's like, what do you think what would you say the trend is here? Everybody would say down. So you would basic all of the best buys in this chart is in a short-term downtrend. All of the best buys. So what people end up doing typically is now that it's probably, let's say, cheap. I don't want to buy it when it's cheap because it might get cheaper. I mean, because nobody thinks in terms of price to value. It's like 60 million Canadian for a good high grade discovery in British Columbia. Now I'll pass on that because I think the trend is down. So, okay, let's say we do that in the case of Goliath. We sell all the lows because we think the trend is down. I mean, let's just, what is this? This is a correction of, well, this was 56, now it's 50. Okay, this was a 50% correction. This was a well, at the most 62 and 50. Okay, 50-60% corrections. This 50%, 50-60%. This was like a 60%. This was a 50. This was a like 60. Now it's like 52. So if you sell every time it's down 50%, and it's obvious that the short-term trend has been down, you do know that you end up. I mean, that is the definition. That's again, that is what all. And he said he's like a neophyte, that he's a beginner, etc. And that's obviously why almost nobody makes any money in this sector, because everybody sells after the correction has already happened, let's say. and the longer it takes, the more firm the short-term trend is, meaning that it much more looks like a downtrend here than here, for example. Now it really looks like a downtrend. So okay, now I'm gonna sell, and I'm gonna wait until it gets better. Let's say. Basically, I think that's what he uh, was hinting at. He's gonna get in uh, uh, when the trend is up, basically. Uh, so when is the trend up? Maybe you buy back here, but now it's down again. Okay, do you sell out then because now you think the trend is down? Then you buy back here when this let's say let's say this is a some kind of flag. Okay, you buy back here because now it's up. Well, now it broke down again. So are you going to sell out here and then again wait until I mean that's literally it's like it's always you're always too late to the party pretty much. It's like, yeah, this is obviously an uptrend. It's like if you bought that, you bought the short term high. It's like, and again, if this indeed turns out to be a great success, multi-million ounce high grade gold system, I think it won't be a problem if you bought this high or this high or this high. In Great Bear, that was the case. You could have bought any high and still made money, and you would have made considerably more if you bought every correction, obviously. But that is how it always. I mean, most people operate. It's like I'm okay paying more and getting less for my money as soon as I see an uptrend. So it's like the ones who bought here, they get more for their money, but you won't buy when you get have so much purchasing power. Now you'll rather get in later when you buy less ounces for your money, and then you're just in time for let's say the next wave down. I mean, if there's anything just one could see from, I mean, the funny part is that that literally is the case in Goliath. It's like, especially since the Shorebet discovery, it's like, I mean, and up until now, you should literally have just bought every correction, and the lower it went, the more you should have bought. But again, that is not how people operate. They don't know what they own typically. They don't see what this could be in like 2 3 years or whatever. So if this is valued at 65 million here, they'd rather buy it here at 120 million because the trend is up. So even though they buy less potential ounces in the ground, they pay more for let's say I mean there has been some news etc. Obviously, but it's like, yeah, now for example, I think market is still kind of expecting maybe that they will actually finance, even though I think they have you know a few million at least, and will actually start the drill season. I think so. I don't know if they will finance whatever, but typically, anyways, like when the actual financing takes place, that would be the low pretty much. So maybe it just lingers here a bit, but it's like, yeah, you could, and then there's a, let's say, a financing whatever, and it's goes up again. But it's like from a long-term perspective, do we think they will not be drilling anything in 2023? I think they will be drilling. I think 2023 might be pretty better year than last year for uh, Goliath. So it's like, would I rather buy here than buy up here? Yeah, I think it would make sense. Sure, I mean the case has changed somewhat, but it's like, yeah, I would say this is a yeah, this is an intact case. They're on to what looks to be could be a multi-million ounce gold and silver system with a lot of additional exploration potential. Oh yeah, and just let's look at some quotes here. Um uh, I really have fun doing these. If you own something that is cheap and you sell because you fear it becoming even cheaper, then you know neither what an opportunity is nor even how you take advantage of one. I mean, that is pretty spot on here. It's like price is what you pay, value is what you get. So if you don't want to own something just because it has become cheaper, you don't. I mean, that's not obviously value investing. You don't even care about the value. You don't even care about the opportunities. Getting better and better and better, better and better and better. No, you're more likely to you're gonna sell when it's the best opportunity, when it's the cheapest to what they have. And again, how do you capture? I mean, what is value investing? It's like buying something that is undervalued and waiting for the market to figure out what you already kind of know. That means you buy something cheap, hold it until it is not cheap, or the case has gone south, and yeah, again, it's all of a sudden expensive. So if you and you sell because you fear it becoming cheaper, meaning because you think the trend is down, you're not. That's not value investing, and you certainly don't know what you own in that case. Because you don't see it as a. I mean, as something becomes cheaper, all else equal, the buying opportunity becomes better. The opportunity is going up exponentially so. But you don't even see the opportunity. You see it as an opportunity to sell because the trend is down. So yeah, then you know neither what an opportunity is nor even how you take advantage of one. You don't see that it's, getting cheaper. You don't see that it's just getting more and more undervalued, that the risks are increasing to the upside, the lower it goes from fair value, let's say. And how you catch that is not from guessing when it's going to go up, it's waiting until it goes up, let's say. Yeah, I mean, there's a bunch of quotes. And I mean, I think this is kind of important. It's like, if today I do not sell something that is still cheap, then winning I am by default, regardless if the portfolio is up or down. I mean, that is in essence, the thing. It's like, to be winning long term, let's say, to have good long term results, we must stick to the same strategy day in and day out. If we have a value investing strategy, or we have like the case for this company that I think it will be worth this much in 2 years, there's no sales until it is not cheap anymore, or the case has changed, or has played out, let's say. That is it. Meaning that 99% of the time you do absolutely nothing because it's at these levels nothing has almost become expensive. And certainly, I mean, most cases don't play. I mean, it's not like every day a case gets played out. Now, some of these cases might be, you might have a 2 year case, or at least a 1 year case. So that means if you're value investing, or investing rationale is that, hey, I think this is going to be worth a lot more in a year, then there's nothing really to do except hold that for a year and do absolutely nothing for a year, unless the market reprices it close to fair value before that. So let's say you own something that you think is 100% undervalued, it's like, or 50% discounted, and you think they're going to create 100% in value. So you buy something for 50 million, you think it's worth 100 million right now, so that's what you expect to be making someday, at least, a 100% return, maybe in a year or two. And you also expect them to double the value in before 2 years in 1 year. So you expect what you bought for 500 million, 50 million will be worth 200 million in 1 year, 12 months from now. If that jumps to, I don't know, yeah, 200 million in 9 months, I mean, yeah, that probably would be a sell in that case. You could find something cheaper. But until that happens, I mean, there's really nothing you should do. Because as soon as you sell something because you think about what the short term trend is, you're just gonna, on average, be selling low and buying high. So it's like, ask yourself, why am I selling? I mean, especially, okay, if you're a bit more, let's say, advanced and you kind of have a, let's say, very good feeling that it might go down, and it's like you have other cases that are like equally as good, but you think one might have some pressure to the downside. Yeah, sure, but it's like I think it's way more important to get the basics right. And I showed that with my I showed it every day with my hodl portfolio. That's just chugging along higher without really any trading at all, unless something gets really wacky or something. It's like I think in one, for example, I think I had some Goliath like yesterday or something, because Goliath had gone down, and maybe some had gone up, and it's like, yeah, I'm just rebalancing a bit. Okay, this other one is not as cheap maybe as Goliath or whatever, so I'll pick up some more of that. I mean, that's basically it. Otherwise, like, I'm not trying to predict anything. I react to what the market gives me. So if I like a store a lot, it goes up 50%, and let's say nothing has really been created in terms of value, but the same goes for another company, but that is like down 20%. Nothing has changed in terms of value. All of a sudden, obviously, I could sell some of this, which I have received my reward for knowing that it's cheap because it's starting to revalue. But this one, people still have no clue uh, yet, let's say, or nobody has figured that out yet. So obviously, if I think, I mean, if they started off at this level, and I think the expected fair value is up here, for example, and at day X, both had an expected value of 73. Fast forward, let's say 3 months, whatever. One and no value has been created, so one of the stocks has 33% of probable upside left. The other one has 113. I mean, it makes kind of sense to like, hey, okay, this actually is a better risk reward right now because this is worth this much and this is also worth this much. But the price to value gap is very different all of a sudden, even though they started off at the same opportunity level. That is pretty much it. I didn't predict that Goliath was going to do this. I didn't predict that it was going to bottom here and go up there, or just going to, I think they actually raised money around here. But it's like, I don't predict it. But sure, if Goliath goes like this without something happening, and you have another stock that has also not really, changed anything in terms of value, maybe you'll naturally take some off. I mean, that's the best way I think I could describe it. It's like being a value shuffler. You're not predicting anything. You're just reacting to what opportunities Mr. Market gives you. So okay, it ramps up some stock. Maybe Goliath was, you know, cheap still here, but something else was even cheaper. So yes, like okay, maybe when Goliath did this, let's say another company went something like this. Let's say you reshuffle some. It's like okay, nothing has really happened. I mean, I really like the story, but like this has gone down already, and this position has grown, so the opportunity is coming a bit less. I mean I mean that's I think the easiest way I can explain why I can be fully invested, and it's like over time it still works out because I constantly look at the risk reward and price to value. And sometimes some stocks go down, they probably should go down, or they should go down, maybe they haven't gone down enough for it to become like really cheap. It's like I wrote in the snow line for room today. That's like okay, I don't know if it's gonna, let's say it's gonna hit two, because people are, as always, like people typically sell again. They sell when it's a downtrend, and they urge other people to sell so they don't feel like they sold the bottom, etc., and hope to buy in lower. It's like I have no idea where Snowline or any other stock is gonna trade tomorrow or next week. But I think I'll be at least smart enough that if something goes down 20%, that should not be down 20%, I'm going to be buying it. So I'm going to create future profits by taking advantage of the volatility. But I'm not going to be selling something that has become cheaper just because I think the trend is in a particular direction. That is not value shuffling. That is literally guessing where the stock price is. That is a momentum trader. That's pretty much it, and that's what everybody ends up doing. So I think that just my, you know, the way I, let's say, think about price and value, and I actually think as an investor, like, okay, what am I buying all this for? That makes it a lot easier to actually be greedy when something is cheap. Yeah. Anyway, a long rant as usual. Hope you got something out of this. Uh, yeah. As always, I mean, know yourself. Know yourself. I know that I'm not good at trading. I'm not the trading sardine guy because I just don't like the uh, feeling of owning something that I don't really know what it is worth. It's like District Metals, for example. It's like, yeah, I'm pretty pumped about them and their uranium, but like, why? Do I know exactly how much that Viken deposit is worth? No, I just know that District Metals was already cheap based on the base metals. So it's like, I can afford to be kind of a, hyped about the upside because it's like, I don't see any. I mean, it's not overvalued. Let's just put it like that. So, in my opinion, the weekend stuff, that's just free upside. And who knows, maybe it's worth a lot more than the current market cap. I have a much easier time with that than if, let's say, a stock was just ramping and it's like, yeah, I'm pretty sure this is overvalued, but I'm just going to hold it because the trend is up. That doesn't make me comfortable at all. That's why I end up always selling out of any trading sardines really or beta plays. It's like I've shown with Bear Creek Mining. I mean, you could literally just play Bear Creek Mining so far and kind of, make a good living just buying every time that crashes. That is has been a trading sardine. I just dislike that. Owning something you know is not great, but yes, it's cheap, and you're just waiting for the masses to wake up. You're not really waiting. You haven't figured out something that the others have figured out. You just know that things change. So that is a big edge in itself. Just knowing how sentiment works, I just can't get myself to own that when there's high quality juniors with uh, really exciting growth prospects out there that I could be buying instead that could have, a tier 2, tier 1 mine one day. That gets me more excited because I think like an owner, I would want to own that. I would want to be a part of that. I would want to have something that might one day be a major mine. And if I buy it cheap enough, that means I'll have a, perhaps decent interest stake in one of the new actually good mines in the future. That is very attractive to me. Again, it's like owning, seeing your portfolio as a mining conglomerate. I mean, if you really saw it as a company, like, okay, I'm going to create the Berkshire Hathaway of junior mining, you would not waste your time with buying some trading sardine or, hey, I think this could pop 10%, even though I know it's a crap company. No, you would buy something that's like Berkshire Hathaway. They buy something, especially if it's private, and then they kind of, I mean, some companies they've owned for like 40 years. So if you just built the best junior mining conglomerate, it's like, I mean, best example I guess is like if you if my portfolio only owned these stocks and held that for like 10 years and a bunch of more here, I mean, I own more than this, but I sometimes have concentrated. I would think that my mining conglomerate would be a nickel producer, maybe a silver tin, lead, yeah, silver tin lead zinc producer, gold producer, which is all it is, another gold mine, a copper mine, a silver mine, a zinc mine, a gold mine, a gold mine, a copper and gold mine, perhaps. It's like, I mean, imagine what value your conglomerate would have if, like, You you actually own partial ownership of some really good mines. Some maybe tier 2, tier 1 projects that's going to be mined for 30 years. I mean, that is cool. That is cool to me. Just flipping paper is, in my opinion, very boring. But like just to think that, hey, I mean, I'm one of the owners of all of this. That is cool to me. Anyway, consider me biased as hell. I own shares of all companies I mentioned. I think. Assume they're banner sponsors. Make up your own mind. Form your own opinion. This is not investing advice. Thanks for listening. Bye.